Hello traders, today is the 10th of May. My name is Hornsey, market absolute trading, and today I'll do a quick market update. Okay, so yesterday was horrendous for investors that are in sort of US and any global stock. We saw massive declines. The S&P 500 and the Nasdaq sort of led everything lower. The Nasdaq came down towards the 12,000 sort of level, swept the lows from the March 2021, and we're seeing a bit of a relief rally today in the London session. However, Friday's low here is probably going to act as resistance. If it doesn't, then we're looking to get back above the FOMC highs around 13,600. But there's a lot of trading still to do before we get into that sort of bullish scenario. It does look extremely bearish. Some people would be looking at a head and shoulders sort of pattern. Obviously, we saw all-time highs, so this is the perfect area to look for, a topping pattern. So maybe a left shoulder, a head, a right shoulder, and then a clear break of the actual neckline. The neckline would have acted as resistance around 13,200 as we saw trading there, and then obviously the bulls gave up, or the bears just took over. Whichever way it was, that's why we saw a big decline down towards 12,000. Below the 200-period moving average, obviously we could come a lot lower for a lot longer. The sort of start of the impulsive move was March 2020. So if we were to pull a fib from the bottom of there up to the sort of all-time highs around 16,000, so 50% would take us down below 12,000 to around 11,600. Really deep retracement takes us back towards that previous all-time high back in February 2020, before the COVID sort of pandemic. We could get all the way back down to 9,000 if we were to do a massive deep retracement. Well, sentiment at the moment is basically thinking that inflation's rising and that any of these companies that are within the index are overvalued, sort of suggesting that traders are ditching these high beta stocks, worried that they're not going to be able to create as much revenue in the future due to higher inflation. So we could actually see this unwind all the way back down, but that's obviously a long way away at the moment. So just concentrating on what's happening at the moment. We did see a sweep of a liquidity pool here around the sort of lows. We could come up to test Friday's low before coming back down. Next sort of target would be within this sort of old range here, and the 50% retracement, so 11,600. If Friday's low acts as resistance, would be my next target. Going to the S&P 500, a similar sort of situation. We found a psychological level, 4,000, closed below that yesterday, a bit of a relief rally today. Didn't really take a swing low, so it was all about the psychological round number. We could get a measured move down to 3,922. Obviously the fib extension sort of suggests that there's a path down towards 3,500, possibly all the way down. If we were to go all the way down to the sort of largest extension, we take out the swing low from March 2020, and that would be devastating. Now, if we go to how many companies are above their 200-period moving average within those two indices, both indices are showing that around 30% of companies currently, and that's declining, are trading above their 200-period moving average. So until we get back above 50%, it's going to be really hard to be bullish on these sort of markets. Like I said, inflation worries are the sort of concern. How are companies going to make as much revenue, how much profit, if there's less stimulus going into the markets, if there's higher inflation eating away at these revenues. Here we've got in red global price of Brent, and that's on a month over month. And then we've got consumer price index, the CPI, which we get the new reading come out on Wednesday, like tomorrow. You can see when Brent or WTI, when energy goes higher, inflation goes higher. And even on the yearly, if I just look at the dots, lines behind, this is the year over year. As oil and energy prices go higher, that's when we're sort of seeing inflation rising too. So oil and energy are kind of key for this inflation, but obviously we've also got supply chain disruptions. And if we go to this chart, again, we've got oil in the black line and inflation in the orange. I just wanted to point out that yesterday we had a close below a significant sort of support line. We've got these three closes here on Brent. So 11th of April, 25th around 25th of April, and then beginning of May. Yesterday we actually closed below that sort of support line. If we were to close below 100 and then maybe get down towards $95, $96 per barrel on Brent, we could actually sort of see oil collapse. The reason for that might be demand destruction from the lockdowns in China, sort of transversing across the globe. Obviously, wars are unpredictable, and we've got one of those in Ukraine. We've also got Saudi Arabia dropping their prices to Europe and Asia. So there could be a case that tomorrow with OPEC and the CPI, we see both of them drop month over month because in terms of outlook for the future, because we're seeing Brent closing below a support line. So if we get back below these swing lows here, that sort of signifies that we've got lower highs and then lower swing lows. That's a downtrend essentially, and that means we could get inflation sort of expectations drop, which then means everybody readjusts their sort of ideas of what inflation is going to be in the future, where yields and rates are going to be in the future. So maybe that's a sort of lifeline for the indices, and we actually see a bounce because we have found like a significant level ahead of that data tomorrow. So just looking through what else is going on, we've got high volatility. VIX is up around, above 30. Yesterday, it sort of closed 34. Obviously, during the pandemic, we got all the way up to 80. Not seeing that, but we are seeing volatility come in. When we see volatility come in, the ranges expand, we get trending moves. We can get through those previous areas of balance because we've got momentum. Unfortunately, it's kind of bearish momentum at the moment. The TLT, obviously related to inflation and rates and things like that, they've sold off bonds. This is the 20-year bond essentially on the ETF. They sold that off, but they have come back down to this level here where we're expecting to find, these were where the buyers were before. So maybe the buyers are still there. If we get through that, then we're looking for, a serious decline in bonds and rising yields. So just going through some markets, just individual stocks. Got Airbnb here in a sort of descending channel. Descending channels, I generally think, break to the upside. Obviously, we need to come back down a little bit lower, probably. We're looking for a possible break to the upside, but we need to see a bottoming pattern, some sort of rejection of these prices. And that could be all the way down here around, above $100 essentially. Netflix obviously did really well during the pandemic sort of period. If we look here, we've got October 2019 was a sell-off. Then we had a smaller sell-off during the pandemic, and then that meteoric rise up to $700 a share. That's, halfway was pretty dramatic when we had that gap down. We just had, a further 50% decline. So Netflix is doing a lot worse in this market route than it did during the pandemic or any other sort of market disruption. That's not good. They're going to need to work out how to sort of generate more revenues. Costco, they've just broke through their 200 period moving average. Obviously, they did it back here in 2021, and the time for that was 2018. That's obviously a really strong company, been trading above its 200 period moving average for the majority of the last several years. So here we've got Broadcom. They've come back down to their 200 period moving average. Again, a really strong company. So if they start trading below their 200 period moving average, that is a significant weakness within the market. Nvidia, just absolutely being decimated. We've got Meta platforms, so Facebook essentially coming down to support, found it around 180. Will they get back above the 237, then start making their way towards a 200 period moving average? Tesla, $1,000 was, a great number. Very sort of, everybody was kind of bullish around that when we saw that get taken again. Unfortunately, that's come back down. There is this sort of support line through that sort of price action. You can see that, below the 200 period moving average, there is a chance that buyers do sort of think this is value. However, if we do get, below some of these swing lows, then that is a lower swing low and a lower swing high from 5th of May. So, that would be bearish. Amazon, obviously, the high street did really badly during the pandemic. Amazon were able to sort of clean up there. However, they are struggling at the moment. Some gaps sort of showing like a strong momentum to the downside. There has been this sort of liquidity void here between 0.035 to 2.257. We've almost sort of backfilled all of that before we get to the next balance area. If we are going to find some support, it might be around 2.053, which was the start of that imbalance. So that'd be interesting to see whether or not whoever is buying between 2018 and 2020, see if they're still there to take it back up. Google or Alphabet, one of the strongest companies in the world, is also below its 200 period moving average. Again, there's like an imbalance here. We had this balance, then this like big push higher. Maybe they're going to backfill that, or maybe like close some gaps below. We'll see. Microsoft, again, breaking through, and then Apple breaking through its 200 period moving average. Now, Apple all the way down to Google, it's very rarely that you get a chance to buy these type of stocks at discount. So at some point, we're going to see a rejection. I'm pretty sure, these companies are not going away. So, once we start to see the volatility come down in the VIX, once we start to see maybe inflation expectations drop from long-term 3% down towards 2%, which is the target for central banks. Once we start to see these companies as a whole start to like tick up towards the 50%, Microsoft, Apple, and Google will be like racing a higher, I'm pretty sure. So, obviously don't try and pick a bottom now. We just need to look out for some sort of reason to get long on those type of stocks in the future, because they're going to start trading at discount, and value buyers will step into the market at some point, I'm pretty sure. Tomorrow we get consumer price index information. Hopefully it shows a drop in inflation expectations and the market readjusts its thinking, and we actually start to see some reason to get bullish. It'd be good if oil did break down for everybody. And that's another key thing to watch out for with OPEC meeting tomorrow too. Okay, good luck today, and I'll speak to you again tomorrow.